the speed of cross-border payments and the opaqueness of that process. And I guess it's also error-prone to some extent with SWIFT. Santander seems to be trying to approach it with a partnership with Ripple. Just curious what your thoughts are on that.
So I do think that of the use cases out there, cross-border is one of the most compelling. We know that intermediation chains cross-border are long and quite opaque, and they're slow, and they can be quite costly. So my sense is that technology with appropriate safeguards could make a material impact and likely will. And it may well be through a partnership model. I don't want to pronounce on any particular approach, but there are a variety of partnerships out there that are trying to innovate and to reduce friction.
Imagine if the Fed held the secret key to an entirely new financial future, a future where XRP is at the center of it all. They say the most explosive news doesn't always come wrapped in flashy graphics or celebrity shoutouts. Sometimes it's revealed through inside intel from the very institution that controls the money flow of our nation. Today, we're pulling back the curtain on what the US Fed just confirmed about XRP, and trust me, you're going to want to stick around. What we're about to explore isn't just another crypto update. It's a complete game changer that's been months in the making.
Why we were even talking about the proposal? We're talking about the proposal because our country needs to have a reset, restructuring, and revaluation of the reserve currency. We're losing the reserve currency status. A buyback could actually help our Federal Reserve corner the market for XRP and establish a new reserve currency. That's why we're even talking about the buyback proposal. And many of you know, I don't actually believe that the buyback is going to happen. I believe that our Federal Reserve through the Treasury Department will work out a deal with Ripple to just buy XRP from the escrow.
Let's jump into a recent clip with Jerome Powell, the man at the helm of the Federal Reserve, whose words are sending shockwaves through both the banking world and the crypto community. Listen closely as he discusses a bold new vision. Our role with Bitcoin really is to look at, with crypto, really to look at the banks. And we think banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. He hints at a shift at a time when 4 years ago, the very idea of the Fed talking crypto would have been unthinkable. But here we are. Powell is laying down markers, signaling that crypto, and particularly XRP, could be part of something much bigger. If you've ever wondered how an institution known for its traditional, risk-averse practices is now opening its arms to digital assets, you're not alone. Today's update isn't just about numbers or statistics. It's about reimagining the entire financial landscape. The Fed's confirmation of what lies ahead for XRP is a breath of fresh air for those tired of the old guard clinging to outdated models while the world around us speeds up. And like every great story, it all begins with a twist. Inside info, high stakes, and bigger ambitions.
Let's say something about CBDC. So we don't have an explicit plan to do what you articulated, but since we are the world's reserve currency, we actually think we need to get this right, and we don't feel an urge or need to be first. It means we already have a first mover advantage because we're the reserve currency. So.
Well, let's understand right now that was a pimp move. And the face you're seeing right now is him just going, I'm Big Daddy Pimp. We already got here. We're the first one. We are the global reserve currency. Let the rest of the world get themselves together. We'll let you know.
I remember a time not long ago when crypto was just a niche interest whispered about in tech forums and championed by die-hard early adopters. Now, fast forward to today. The Fed's new stance suggests that crypto assets aren't just an alternative asset class. They're becoming a core component of our financial system. And XRP, with its unique position bridging traditional finance and the new digital age, is right at the epicenter of this paradigm shift. Before we dive deeper, let's break down exactly what's been happening behind the scenes. In recent exchanges, Powell made it clear that the Fed's perspective on digital currency has undergone a dramatic transformation. Gone are the days when regulation and skepticism overshadowed innovation. Now the conversation is shifting, right now, to a world where banks are not only capable of managing crypto assets, but are actively being encouraged to do so as long as they can balance innovation with risk management.
I don't think a lot of people realize how screwed the global financial and banking system is. These are the bank collapses from 2008 to 2010. You can see they stacked up massively, and depending on the size of the bubble, that was how big the crash is. So the biggest one was Washington Mutual Bank at $307 billion. This is the bank collapses in 2022 and beyond. We are starting with a much bigger snowman here. First Republic Bank, already $229 billion. Silicon Valley Bank, $209 billion. Signature Bank, $110 billion. Shout out to MBO stock for this, but what I'm interested in seeing is what is birthed out of this financial crumble and this collapse. Because Bitcoin was created out of this. What's going to be created out of that? Position yourself accordingly, buy some crypto, learn about crypto, buy some gold, silver, whatever you need to do.
Take a moment to digest this. Powell's recent remarks about the Fed's approach to digital assets and crypto customers aren't just idle chatter. They signal an institutional recognition that crypto isn't a passing trend. Instead, it's an integral part of the modern financial ecosystem. And for XRP holders, this news is monumental. But what does this mean for the average crypto investor, especially those who have been riding the XRP wave for years? First, the Fed's acknowledgement could pave the way for more stability in the crypto market, with major regulators and traditional financial institutions taking a more measured yet optimistic approach to crypto. There is a newfound sense of legitimacy brewing. And when you have that blend of institutional support with a decentralized asset like XRP, you're looking at a future where the traditional and the modern coalesce, giving crypto a more defined role in global finance.
Don't see them as a financial stability concern at the moment. I do think they are risky. They're not backed by anything, and I think there are big consumer issues for consumers who may or may not understand what they're getting, and there's certainly developments in the markets that are worth following, which are really not in our jurisdiction, but things like the kind of leverage that's built into them and those sorts of things is certainly worth watching.
Now, let's rewind slightly to another key piece of the puzzle, the words of Donald Trump. Yes, you heard that right. At a time when discussions on green energy, climate change, and even gender ideology seem to dominate every headline, Trump's piercing critique of these misplaced priorities has resonated with many. He once pointed out, if the Fed had spent less time on, certain ideological pursuits, inflation wouldn't be such a problem. While his statement has sparked controversy, there's no denying its impact. It forced the nation to re-examine what truly matters when it comes to protecting our economy. And when you peel back the layers of political rhetoric, you see that the current economic conversation is less about ideology and more about results, about making sure that institutions like the Fed focus on what they do best, keeping the financial engine running smoothly. In that context, the recent revelations about XRP take on an even sharper focus. Here we have a scenario where the Fed, amid its internal debates and external pressures, is making moves that will likely have ripple effects far beyond the traditional banking system. We're now talking about potential cuts to interest rates in a framework that might not even wait for the classic 2% inflation marker. You see, Jerome Powell has even hinted that the Fed is considering adjusting its monetary levers sooner than expected, hinting at a scenario where market dynamics could pivot swiftly and dramatically. And as we know, when interest rates drop and liquidity increases, assets like XRP can benefit massively from an environment that encourages investment over hoarding cash.
Announcement will have an impact on the U.S. economy and your bank account. First, the Federal Reserve's interest rate policy is tied to borrowing rates. Higher mortgage rates means higher monthly payments for people buying homes now. And since the central bank began lifting rates from its pandemic-era low, mortgage applications have seen a steep decline, plunging 40% in the last year. Second, rising interest rates push up yields for savers, with some high-yield accounts now earning more than 3.5% annually. And last, Fed's ongoing battle against rising inflation. Chairman Powell reiterating the central bank will do everything in its power to fight rising costs, saying it won't stop until inflation is subdued.
We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate to return inflation to 2% over time.
Now, while Powell's clip offers one facet of this unfolding drama, there's a whole host of other developments that flesh out this narrative. Across the United States, state-level initiatives are also gearing up to embrace a future where digital assets aren't relegated to the fringes. Illinois is taking bold steps with plans to establish a Bitcoin strategic reserve, and the ideas don't stop there. Texas, too, with Lieutenant Governor Dan Patrick unveiling plans for a state-level Bitcoin reserve, is betting big on cryptocurrency as a cornerstone of future financial stability. These moves are quietly laying the groundwork, and while they're often overshadowed by the larger national headlines, they are a critical piece of the puzzle. They show a united front emerging from various levels of government, a collective nod of acknowledgement to the fact that crypto isn't just a speculative bubble, but a viable store of value and an investment in the future. It's this convergence of national and state-level interests that makes the recent Fed announcement so explosive. Imagine a world where regulatory bodies, state governments, and even some of the most influential figures in finance all nod in agreement on the same issue, that there is a secure, sustainable future in digital assets. And right at the center of it all is XRP, positioned perfectly to benefit from this upward trajectory.
Crypto has been in the news a great deal over the last couple of weeks because President Trump has kept crypto in the news for the last couple of weeks. I mean, this is somebody who ran for office on a pledge to turn the U.S. into the crypto capital of the planet.
And if Bitcoin is going to the moon, as we say, it's going to the moon, I want America to be the nation that leads the way, and that's what's going to happen.
So one of the ideas that President Trump has considered is the creation of this strategic Bitcoin reserve. And that would see the United States possess some amount of Bitcoin that it would just sit on for a number of years. So to understand this, you have to think a little bit about what the US currently does. You know, we have foreign currencies in reserve, for example. We hold treasury bills. We even have stockpiles of medical equipment and oil that we release when the price of gas gets too high. But the idea that President Trump has put forward is that we would do the same for Bitcoin, starting with the cryptocurrency that the US already has in its possession. The U.S. has seized about $20 billion or so of Bitcoin and other assets through past criminal investigations, and typically the U.S. government sells that stuff off over the years. With Bitcoin, with the idea that President Trump has put forward, the U.S. would keep that Bitcoin and it would sit on it.
Let's switch gears for a moment and explore a few other critical insights that are painting a broader picture of what's ahead. Jerome Powell's comments suggested that we don't need to wait for every ideal market condition to come together before making critical moves. In other words, he's ready to pivot at the first sign of favorable data. He intimated that even marginal improvements in inflation numbers could catalyze a change in interest rate policies. Such agility in decision-making is unheard of in many parts of traditional finance, but here it signals that the Fed is not waiting idly for a perfect storm. It's proactively shaping it. And when you have an institution dynamically steering monetary policy in favor of accelerated spending, it creates an environment ripe for innovation and risk-taking, precisely what the crypto world thrives on. Now, I'm sure many of you are asking yourselves, what does this mean for XRP specifically? Well, let's peel back another layer here. Ripple and its native asset XRP have long been at the crossroads between traditional finance and the new wave of digital assets. XRP has established itself as a rapid, cost-effective method for transferring money across borders. As the Fed begins signaling changes that favor more agile, modernized financial practices, XRP is set up to capture a larger share of that transformative moment. It's like watching an underdog athlete finally get the coach's attention. All the raw talent and unconventional techniques suddenly become undeniable assets, ripe for reward on the big stage.
The other day I was on Twitter, of course, and I came across this article. It's actually a transcript by Jerome Powell, who is chairman of the Federal Reserve, and it was on January 10th of this year, which I was kind of shocked to learn that it was just so recent. So in my opinion, he makes the case for Bitcoin without ever mentioning Bitcoin, because he's clearly going to be anti-Bitcoin. So he has this very long transcript, several points. I'm going to go down to the third point, though, and read this off. He says we should not wander off to pursue perceived social benefits that are not tightly linked to our statutory goals and authorities. So it's important to remember that the Federal Reserve is not necessarily a government agency. They are very closely related, obviously, but they're there to raise rates and maintain inflation.
For years, banks have wrestled with the idea of holding crypto assets on their balance sheets. Concerns over risk and regulatory compliance have kept them on the sidelines, until now. With the Fed's new posture, there's a palpable shift in sentiment. Some of the country's largest institutions are now considering ways to integrate crypto into their risk management frameworks, a move that could potentially open the floodgates for mainstream financial adoption. And while the spotlight often shines on Bitcoin, it's important to remember that XRP, with its unique advantages in speed and efficiency, could see monumental gains as a result. Beyond the corridors of power at the Fed, there's yet another development that is poised to redefine the crypto landscape: the SEC's announcement to establish a dedicated cryptocurrency task force. As reported on Bloomberg Crypto, this team will zero in on cryptocurrency oversight, further blurring the lines between traditional financial regulation and modern digital innovation. It's a signal to everyone in the market that the days of treating crypto as a peripheral, almost fringe aspect of finance are over. Instead, regulators are gearing up to ensure that the crypto ecosystem is robust, secure, and integrated into the wider economic narrative.
Now, there was news of Uphold partnering with Ripple. Tell us about that partnership and how you guys are working together.
We're a node in the Ripple ODL network, which is their payments product. What it does is help multinational companies move large amounts of treasury from one region in the world to another using crypto as the transport layer. Ripple's ODL solution takes away a lot of the hassle, makes it cheap and fast to move money cross-border. What we do is we service them in the US, UK, and European corridors. We convert XRP that's put into the client's account on Uphold. We instantly convert it into fiat, and then we handle payouts to banks in the UK, Europe, and US. It's been a fantastic peep behind the curtains because you can see that tens of millions of dollars is being moved by well-known companies now using crypto as the transport layer.
Of course, it wouldn't be a complete picture without addressing one more piece of the puzzle that has been stirring up discussion lately: the shift in the SEC policies around crypto custody rules, particularly the contentious SAB 121. When banks are told that holding crypto assets could turn into a regulatory nightmare, it significantly alters their willingness to step into the arena. Yet if nothing else, it has sparked a critical debate about what the true purpose of financial regulation should be in a world that's moving at digital speed. Before we wrap up, I want you to consider this. While the debates may rage on about climate change, ideology, or fiscal policies, the core truth remains: the financial world is shifting. And for XRP, that means an unprecedented opportunity to redefine its role and emerge not just as a niche currency, but as a critical player in a reimagined financial order.
Staff Accounting Bulletin 121. That's not how custody works. That's just a made-up rule by one agency, the SEC, at the staff level, and it's not even how custody works. I'm not sure people at the SEC can even properly describe how it should work, and they did not consult with the bank supervisors who are responsible for custody. So if you're concerned about a non-bank custodian, right, and there are, right, we have non-bank custodians of crypto wallets, correct? Then they should have written the rule about that. They didn't write the rule about that. They didn't. And I don't think they have the authority to even write that rule, probably, but they might under some narrow circumstances. But they swept up the entire banking industry without discussing that with the Federal Reserve or the Treasury. I find that wrong, a little unbelievable, really, but certainly wrong.
So as we sign off, keep your eyes on the horizon. The future of crypto is unfolding before our very eyes, and this monumental update from the Fed is the spark that will illuminate the path forward. Thanks for tuning in, and don't forget to hit that like button, subscribe, and join the conversation, because next time we'll be back with even more inside info, diving further into how this historic pivot will reshape not just XRP, but the entire financial ecosystem.